On the 16th of November 2021, a Singaporean company known as Sea Limited, behind blockbuster brands such as Shop and Garena, was once known as one of the world's largest corporations. It was a company worth nearly $200 billion, which meant the valuation of Sea Limited was worth far more than any other Singaporean company. It was worth more than the collective valuation of the three giant banking financial groups of Singapore, which are known as the DBS Group, OCBC Bank, and the UOB. The banks that have helped establish the entire financial status of Singapore. And here's a new technology business valued more than all three combined. Furthermore, it was even at the world stage of company valuations, enough to say that it made it to the big leagues. However, just a year later, the market valuation of Sea Limited crashed and was valued at no more than $25 billion, making its stunning rise in 2021 as a world leader and the crown jewel of Southeast Asia, to now raising many questions about the company's stability. And its valuation is even nowhere near any of the three major Singaporean banks, with UOB valued at $33 billion, OCBC at $38 billion, and DBS at $63 billion. And the fallout of Sea Limited's valuation is not only the company seeing a hamper in its valuation. Grab Holdings, a similar Singaporean enlisted business that operates in the technology sector, has also seen a huge drop in its value. When it had gone through an SPAC merger, it was once valued at $40 billion at its peak around 2021. Just a year later, the entire company had also seen its massive fallout to less than $10 billion. Many investors, Singaporean citizens, and the users of its myriad products and services across Southeast Asia have come to wonder, what happened? Has Sea Limited and Grab Holdings failed? Many have been distraught. If their valuation could drop this much, are they even going to declare bankruptcy? Well, let us discuss all of these and just how these two Singaporean companies went from being among the most beloved brands across the region to being the largest losers in the history of Southeast Asian history. First and foremost, before we move into the specific fallacies that each company faced, we must address one other variable in the entire valuation fallout. Their drop may have something to do with the internal management of the company, but we also need to address the macro factors. You see, their valuation dropping is in correspondence to a lot of other technology companies. It is not only these two companies in simpler terms, but also all around the world. Most technology companies, especially those in the high-growth area, a pattern that is followed by Sea Limited and Grab Holdings, have faced a list of challenges in just the past year. We have seen the rise of interest rates led by unexpected inflation. There's a war ongoing right now in Russia that's leading to the price of many commodities fluctuating. And most importantly, the entire technology sector has seen shortages in the semiconductor industry. A key component that ensures growth is seen in the industry. Hence, one part of the reason why their valuation had dropped was because of this long list of challenges. The other part of the reason is also because of internal management, which will be discussed later on. Therefore, the basic summary of why there's a huge fallout in these two companies cannot just be attributed to a failure in management, but also due to the world's issues. From a valuation standpoint, however, it's also true that Sea Limited and Grab Holdings have fared worse when it comes to their valuation fallout, which also has to deal with the company being overvalued. This is another factor that we must understand, that their company had seen a tremendous rise in valuation in just a few months. It has been named as the winner due to the same macro factors faced in 2020. For instance, Sea Limited before COVID-19 had been valued at less than $20 billion, and yet it was during COVID-19 that its valuation skyrocketed to over $200 billion. This was driven because of their products and services, which were accessible despite the lockdown. Sea Limited, after all, is Southeast Asia's reigning internet company. It owns both Shopee and Garena, two of the largest businesses in their respective industry, e-commerce and online gaming. Now let us discuss the two more in detail, starting with Sea Limited. The success of this company was driven in part due to COVID-19, but also due to the lack of competition seen in both e-commerce and gaming. When Sea Limited reported its annual report at the end of 2021, it saw its entire sales double and triple in size. The total revenue reported by Sea Limited in 2020 was only $4.3 billion. Shopee accounted for $2 billion. Garena accounted for the other $2.1 billion. And the remaining was through newly introduced services and other smaller subsidiaries. And just a year later, the total revenue reported by Sea Limited in 2021 was a whopping $9.9 billion, more than double what it did last year. These sales were driven by the same businesses. Shopee had reported $5.1 billion in sales, while Garena had over $4.3 billion. Its financial services had also grown tremendously, contributing $400 million to the bucket. Therefore, most buyers in the public stock exchange have rushed in to buy this opportunity, since the growth of Sea Limited was projected to continue. What is probably even more surprising is that not every billion-dollar company can do what they did, double their sales in just 1 year. Their growth, therefore, was amazing. It was applauded here and there. The market that Sea Limited was catering to was even growing. Much of the internet economy surrounding Southeast Asia was an untapped potential, as some have indicated. Moreover, they were also aggressively expanding overseas. They were entering different parts of Asia, Europe, and South America. They were, in other words, trying to enter every market and taking advantage of all the opportunities in sight. However, there was just one problem. These were all speculations as of yet. Their leadership in their own home region was no doubt a given. They were the leaders there. But there was a huge difference between them being a leader in Southeast Asia and the current valuation of the internet economy. As of the end of 2021, the entire Southeast Asian region had an internet economy valued at just $174 billion, whereas Sea Limited had nearly $200 billion. How can Sea Limited be valued more than the entire internet economy? In fact, the term internet economy is the collective of all the internet value, meaning we have to add all the e-commerce, ride-hailing, live streaming, and whatever there is. But Sea Limited was not operating in all industries, but limited to only a few. Speculation has then driven the company. People thought that they would eat the entire internet market share of their region. Furthermore, their overseas operations were taking a hit. Shopee had withdrawn its operations from a lot of international markets, such as India, Spain, France, and other parts of South America, citing stiff competition. Garena, on the other hand, was even faced with a larger challenge. Their largest product, Free Fire, was banned in India, one of its largest markets. Come the latest quarterly report in 2Q 2022, although sales had increased from $2.2 billion to $2.9 billion, it was only driven by a mixed bag of acceptable and menacing. Shopee's sales increased from $1.2 to $1.7 billion, but Garena dropped from $1.1 billion to just less than $717 million. Furthermore, the company also lost a stunningly massive amount of money. The previous quarter had only seen the company lose $24 million, but this time around it had reported a shocking $500 million. What went wrong? Well, we can first point out that some operations did not work, but we can also indicate that since the world has reopened, a lot of consumers have quickly changed from what once was a buyer of internet goods to now favoring offline retail and entertainment. Grab, on the other hand, was quite different. Although the company's operations were more of a beneficiary due to the reopening, since everybody wanted to book a ride-hailing, it was still in a world of trouble led by massive losses. When Grab had enlisted their shares by the end of 2021, that was the only time when they actually opened their financial data for the world to see. The world thought it was going to be a massive and opportunistic company, driven by big sales after big sales. The problem was it was still a startup during that time, and it needed a lot of money to make its company work. Therefore, it was burning a lot of cash, and when we mean a lot, we mean that they're burning billions of dollars. In order to keep the company running and hit expected targets, they consistently needed to keep borrowing money from banks, or raising money through other forms of financial instruments. But when can the company continue to do this? When are they going to finally break into a zone of profits so they do not need to rely on debt? Since the company had listed its shares, it had already lost nearly $1.4 billion in just 2 quarters. From the end of 2021 and until the second quarter of 2022, their total cash held went from $4.8 billion to just $2.6 billion. Would we say that the drop of these two companies was due to failing management, or was it due to macro factors? Well, to begin with, the fallacies of these two companies were driven by these two large factors together. Mismanagement has plagued Sea Limited to enter markets that they should not have. Grab, on the other hand, is still fairly new in the public world. Therefore, it would be inherently difficult to say what is truly driving the company. However, what is going to be their largest challenge would be the continuing macro factors that the world is facing today. Can Grab even continue to operate the same way it has always done? Or will it need to pivot sometime soon? Well, anyway, these are still all subjective to just these reasons. What else do you think are their challenges? Let us know down below. Thanks for watching.